Okay, looks like we are now live. Get going here. So while I'm waiting for a couple folks to join me, but while you are joining, please go ahead and share this on your page. We're going to give some great information, kind of update you guys on the mortgage industry and trying to get a loan and all the information that you need for that. And just getting situated here. All right. Information, tips and tools and resources through the home buying process. And of course, a major player, a big part of that is getting a mortgage, getting pre-approved through your lender. So, Chris, can you go ahead and introduce yourself to everyone?
Hello, everyone. My name is Chris Hardy. I'm a loan officer from Freedom Mortgage. Been with Freedom for a couple months now, but I've been in the business for about 7 years. Love first-time home buyers. That's pretty much, I would say, 60 to 70% of what I deal with. Also, obviously, do refis as well. But I definitely have a passion for first-time home buyers and of course, my fellow vets.
Okay, perfect. So Chris is not a stranger. He has joined me on here before, but I like to, things are changing. I think when we started this, we were in the middle of a quarantine when we last talked. So I think things have shifted, I'm guessing for the better now. So I just want to kind of bring you back on and give some feedback to the folks here. So how are things going since maybe the beginning of March to now in terms of getting folks pre-approved for a loan?
Okay, so as you know, it just was a crazy period. So when the first kind of COVID kind of rolled out, a lot of banks and lenders were starting to brace themselves for the future and to see how this thing was going to kind of roll out and play, and brace for foreclosures and stuff like that. Fast forward time, now we got a couple months under our belt, and not to say that things have got back to normal, but starting to see some type of stabilization within that. And so when we first started kicking this off, at the time, credit scores were going up, so they were taking less of a low credit scores, higher risk loans. They were kind of cutting some of that back, just to kind of see how things have gone. Within the last month, Freedom is really kind of going back to business as usual. Not quite. We did used to have a program for 550, but our minimum score now is down to 600. We suspended jumbo loans. We kind of rolled those back out as of like this week. Obviously, there's going to be some still some criteria, but we got those back out there. And even the home equity lines, we just kind of rolled those back out as well. So not to say that it's back to 100% before COVID, but even with our streamlines, there were some, we had some credit scores. We kind of relaxed those. So we're starting to kind of fall back into the normal routine of doing business, and that's good for the consumer.
Okay. So how have your credit applications, are people still afraid to move forward with buying a home? Are you seeing it slow down a little bit? Are you picking it up?
Well, I believe that we've had a heavy dose since the year has started, and people are still out there. They're looking to get approved. It's just the scenarios now. You know, you got people who were out of work for a couple months, coming back to work. Those are the main things. How to use the unemployment. Can you use the unemployment? So you see a lot more questions about the income and the income qualifications. Obviously, you guys know, nationwide, the government pretty much put all student loans in forbearance for most part for most of the country. So you ask about that as well. So the questions are because of those things, but really the credit applications, the interest to buy, is as high as it's been for me.
Yeah. So there's been the market has been very active right now. In fact, we're just dealing with the situation of not having enough housing inventory for people. So the buying process for them is taking a lot longer. So I do have a couple questions because this is starting to come up more and more. So typically that pre-approval is usually good for about 90 days. Is that what it is for you guys, about 90 days?
Excuse me. Yes, that's accurate. But what
Okay.
you're trying to, well, just to kind of put a thumbnail on that, that's 90 days to go through the pre-approval process and the loan process. Like once you get a home, and then you got to close the loan as well. And just because it's fresh on my mind, I had a guy, and he said, "Hey, I'm going to put an offer on this home. Is my pre-approval still good?" And he was about 65 days into it. And so I said, "I'm gonna be honest with you. I would like to pull credit again." And he didn't want that. But just to explain, the normal loan process right now is between 30 to 45 days. I always ask for 45, but we're starting to kind of roll back towards the 30 slowly. But so just to give you an idea, if you got 65 days, you're talking 25 days left on that loan process. At no time does any loan originator want to pull credit in the middle of the loan. That's just a worry. So he didn't understand the process that yes, you do have 90 days, absolutely, for that credit report. But that's got to carry you through the shopping for a home, and it's got to carry you through the loan process.
Okay. That is so important, you guys, to really know and understand what he just explained. So when you get that pre-approval, you have a 90-day period of finding the home and closing on that loan. And this comes up all the time because people are so afraid to run their credit again because they've heard about how it drops your score. Have you seen large impacts in this when you pull credit, like their score just dramatically drops when you pull credit again?
I've had one or two horror stories, but not often. Normally, and this is not being stereotypical, but normally if someone has good credit, it's a way of their life. It's what they do. You don't really see too much of a drop off. Usually when they have good to excellent credit, like I said, it's just kind of like their behavior, their paying patterns. But of course, anytime employment kind of goes to the tank, that can always affect. So usually, if they work good, I'm not too worried about them. But honestly, those are the ones that don't want their credit for it. So, but no, usually, if you can continue good habits of paying your bills and stuff like that, most people not have nothing to worry about. But yes, I would say 20% of the time there is the ones that were on their way, and then we pull it again, and we had to kind of take 2 steps back. So
it's not uncommon. It's not uncommon to have your credit pulled again. So I don't want you guys to be alarmed, and just know that this may be a necessary part of the process. So that's just something to really think about. If you are in a situation where your credit is borderline, like you barely got approved in the first place, when you go through this, still work on your credit, still work on improving it until you find that home. But because there is lower inventory, it's taking folks a little longer to find a home because homes are going so quick. So you may run out of time. That 90-day period may not be long enough for you guys.
Agreed. Stay diligent and continue to pay your bills and do those things that got you in the right position.
As far as down payment, what are you seeing in terms of down payment? Do you suggest that they come with a little bit more if they're going with FHA? Or sometimes people are going FHA. FHA is 3.5% down, but then they say, well, I have, some extra money. Do I want to put down? Do you recommend that, or should they stick to that 3.5%?
Now, that's a good question because just to speak on, let's just talk about from your standpoint as a realtor in negotiations, because the market is so tight. Not to say that you need to put more money down, for qualifications. But now we're starting to enter the market where it's like, okay, don't get me wrong, 90% of my clients, and we're talking across the board, FHA, VA, or conventional, most people do require or request some seller paid closing costs. Okay, it's it's nothing to be ashamed with. Even with down payment assistance, people still try to get a little bit of closing costs paid from the seller. Like I said, that's normal. But now, if you got the extra money, what the realtors and loan officers are starting to look at is how much of that do you actually need? Because to be a little bit more enticing on your offers, you might want to tone down the down payment, the closing costs from the seller, to make your offer a little bit more attractive. Mm-hmm. So what we're seeing is not on the qualification side, but maybe on the strength that, okay, you got a little extra money. Maybe instead of asking for $5,000 in closing costs, maybe we cut it down to $3,000 because you have it, or $3,500. You know, right. And so you see that more so than actually just having to put more down for an FHA. It's like just kind of scale it back on the closing costs a little.
Okay. Okay. Mm-hmm. So we touched on this a little bit, and I want to kind of go back to it. A number of people were unemployed and or furloughed. Some people, they kind of taken advantage of that like $600 per week. How will this impact them in terms of now they're getting back to work potentially, or maybe they're still furloughed or unemployed? But they have plans of buying a home. How will this impact them, and what should they consider and do to prepare themselves to buy a home?
Which is a good one too, as well, because okay, I'll give you two spectrums. Okay, for the normal person that's on furlough, maybe a government official or something like that, county official. The furlough, we have to take that in consideration until you get back fully. Okay, and so maybe let me back it up. So for the county officials, because I actually got two scenarios. I just, you just try to edit the people. So if you have it on furlough and maybe you're not up to full strength right now, then we have to kind of take it. If you're at 30 hours a week and you're getting unemployment, we're not going to use that at all. And we just got to kind of qualify you in the 30 hours that you're working. Or I'll tell you, hey, if you're off for the next maybe 4 weeks, call me when you start to get back to work. And then once you're full stride, we just take it from there. But then you have contractors, union people. And so it's customary for a union person, maybe by trade, electrician or something like that, where they have unemployment throughout the year, or, there's stints where they're not working. And so Fannie Mae, all of the government and underwriters are looking at the fact that if historically certain times a year, because of your trade, you're catching unemployment, and because of you're in the union, or, it's slow in the winter and stuff like that, we can actually use that for them, because pre-COVID, it just is what it is. They have their times and their periods. And so it's a little bit more normal. But for people who are now just kind of getting it just to get by, it's just not the same case. You know what I'm saying? So that's what you're starting to look at now. We're looking at is like, all right, if you are an apprentice or something like that, or seasonal or lawn, landscape, whatever, I guess every year, if you can show that, yeah, every year around this time you're getting unemployment anyway, we're still using that. If not, for most people, unfortunately, until you get back to work full stride, we got to use the average of hours that you've been working already for this year.
Okay. So that individual that is laid off, so they've worked prior to, they've been working all of this time up until they got laid off. Maybe in April, they got laid off from work. Is there a certain time frame? Like when should, they may have gotten a little comfortable on the checks that have come in. Is there a time frame that they need to be aware of that could put them in jeopardy of not being able to get a loan?
So what it's going to be is, It happens all the time right now. Hey, Chris, I'm back to work now. How long do I have to wait? Now, technically, for the underwriting purposes, we want to see a month's worth of pay stubs. But if I'm pre-approving you, I'm telling people, hey, you're going to get that. Give me a week or two where you're back. Let me see a week or two where you're working full time, and we can kind of go from there. Now, what you're going to have to do is produce pay stubs from this point on, to make sure that everything is staying the same. But you don't have to wait a month or two and then come to me. Once you know you back full stride, we can go. Now, in the event that at any time those hours get reduced again, let's just say you're a restaurant worker now or something like that, bartender, whatever. We're just know that the underwriting is going to take it in effect because you can't put guidelines on this kind of stuff. We just kind of everybody's filling it out. So the climate, the current climate is definitely going to play a role in it. You know what I'm saying, of what's going on.
Okay. So still talking about work.
Mm-hmm.
And I get two types of people oftentimes. So the first one would be self-employed folks. Oftentimes people are self-employed. They are making really good money, but as business owner, we write off everything just because we don't want to pay as much in taxes. What do you say to that individual? What can they do? How should they plan if they're thinking a year from now they want to buy a home? How should they plan for that?
So I got a couple self-employment instances going on right now. So basically, the standard is, okay, 2 years of tax returns. You got to file that income. Okay, we want to see it filed. If you got 1 year and then you're saying, well, Chris, I plan on filing an extension this year, then we got to go back to 17. But you say, hey, I made a lot more money in 19. Well, then you got to file it. You got to file it. So that's kind of where we at. That's the general. Now, government, FHA, they always wanted to see P&L, which is a profit and loss statement. Okay, that's been the customary thing. It's been like that. Conventional, they didn't really care. You see the tax returns, and they would go from there. But because of COVID, Fannie Mae and Freddie has decided now that they want to see the profit and loss statement. Now, the interesting thing about this is the profit and loss is just to show basically that you are working and you've been getting the income. It cannot help you. Okay, I'll say that again, because there are certain businesses that's because of COVID, they're taking off. Profit and loss, this is how it's going to be. I'm gonna try to keep it simple. You got 19 and 18. Okay, let's just say 18 you made $4,000. Okay, 19 you made $5,000. All right, of course that's low. Whatever. We just gonna keep it simple math. If your profit and loss is showing that you're on pace to make $6,000 this year, we can't use that 6,000 to qualify you. We're going to take the average of 4 and 5, which is $4,500. Okay, but let's say in 18 you made 4,000, 19 you made 5,000, and this year you're projected to make 3,000. Well, then we're not going to take the average of 4.5.
Oh man,
we're going 3,000 now. You know what I'm saying? So the profit and loss is there to only it can only validate what we already have, or it's going to hurt you.
Wow.
And yeah, that's it. And now that they broke it down even a little further into 2 profit and loss statements. Okay, you have a profit and loss that your CPA has done for you, certified profit and loss, and then you have one that you can obviously do yourself because everybody doesn't have a CPA that's self-employed. Now, you can't give me a profit and loss that's saying that you're making 6,000, but in the last 2 months of bank statements, you've only seen $300 deposited. It's not going to work. You don't have it to back up if you're not using the audited one. The bank statements have to back up what you put on that profit and loss statement. So that's just to give you guys a window of what we're going into. And of course, like I said, people are taking hits. I'm sorry, self-employment is tough right now for certain people.
Wow, this is all new, you guys. That's new information that they're rolling out. So they're tightening the reins on self-employment. So you have to be extra detailed in your business and making sure that you are reporting accurately if you plan on buying a home. So that's definitely some great information right there. So the second part of that question that I wanted to ask about is a common scenario. I work with a lot of people who they work a traditional 9-to-5 job, right?
Mhm.
But they supplement their income and they may do something on the side. I don't know. I had one the other day. She drives for Uber. She is a contract driver for Uber. So she can basically call them whenever she wants to pick up hours or not pick up hours. Or maybe I make face masks. I don't know. That's
Mhm.
common right now. Everybody's making face masks. Can they include that income as part of their income when applying for a home?
I got an yeah. The short answer is yes. I got another scenario. A lot of Amazon workers are 1099 as well. Not everybody is W-2 there. You can be an independent worker at Amazon as well. And I got one of those scenarios. It comes down to if you're not filing it on taxes, and this is something that's just new that you just kicked off this year. There's just not enough data on that to use that to say that you're going to keep that up. So we can't use it unless it's pre-documented. Okay. Now it can help you for your assets because of course we still source funds and we like to see where your money came from and deposits of money and stuff like that. So yes, and if we don't have a good source of deposit of cash or whatever, you can't use that. But in those instances, the second job can justify some of that money that extra money that you're putting in your bank statements, but we can't use it for income.
Okay. Okay. That makes sense. So basically, if you have the history there of multiple years, you had it on your taxes, then you can include it. If it's something new, you're just able to use it for documentation purposes. Okay.
Right, right. Like I said, I feel. Don't get me wrong. I said the same thing to self-employed. Hey, look, it's your right. I mean, you got expenses. I mean, it's not all actual income. I know everybody says, "Hey, but I done this X, Y, and Z, and I made all this money," and I get it. I get it. But there's always going to be that divide between what you made and what you're telling Uncle Sam you made. And so you got to work that out. There's always, there's bank statement programs that will one day come back. And there'll always be a couple of niche programs out there for something like that. But for right now, during these COVID times, that stuff is kind of stripped away a little bit. And if you haven't been claiming it, you're not going to be able to use it.
Okay. So I got to throw questions out there for my investor folks.
Hmm.
They are always asking questions and looking for funding for their deals. And so, what do you say to the individual that wants to buy an investment property? Two scenarios. Investor wants to buy investment property, currently has a home under FHA guidelines already, but wants to
Hmm.
buy investment property and use a conventional loan. Can they do this?
They definitely can. Obviously, it can be two govies is when you start to kind of get into it. But no, if they're going conventional, the main thing is just have you should have a decent credit score. Have your down payment. You're probably looking at between 15 to 25%, depending on the scenario. Most of the time, it's 20. You start talking multi-families, you're gonna have to put more. You're gonna have to put the 25. Um, but and I'll just say this because this I know for sure. They're watch banks, watch lenders because they're actually starting to want to see more reserves. Okay. Now, most of the time for multi-families, conventional, they usually want to see 6 months reserve anyway. Most of the time, the system will call for that. But now you're starting to see maybe the bank or something, lenders have overlays where instead of 6 months of reserves, they want to see 12 months. It's
Oh,
very, very popular. Yeah. Freedom, actually, we just rolled that back. Like I said, we're starting to get back to business. But I know us, we had it, and a lot of other places had, where they just want to see more money saved. It's just taking some of the risk off. So don't be surprised if that's what your bank wants to see, is an additional 6 months of mortgage payments. That's what reserves are in the bank.
Wow, that will kill the deal for so many,
Yeah.
because they don't have that savings. So something to think about, you guys, if you're thinking about investing, is making sure you have enough savings. Like you said, I know a lot of times people are interested in those multifamily units because of the income potential on there. But when you go that multifamily, yeah, they are oftentimes asking for that 25% down. And now what Chris is saying on top of that is asking for some reserve. So how much money do you have in the bank to cover all of this? Is there I'm sorry.
Go ahead. I'm sorry.
Is there a number of properties that an individual can own if they go conventional?
No, that's more lender specified, bank specified. Some of the niche lending places that they might let you have a couple more. Most of the time for a place like Freedom, you can have up to 5. You can do 5. Yeah,
Okay.
you can do 5.
Is there anything that you're seeing in the market that you want to share with everyone that maybe we didn't kind of go over here? Some useful,
I'll just recap kind of what we talked, a few points. Like, number one, the market is competitive. Okay, you still, and I'll save my realtors with this one. You still have a couple borrowers who's looking for a deal. This is not the time for deals. This is just not the time for deals. You're going to get your heart broke, and I mean that in the nicest way. I mean, I know people who's going over, they're overbidding and still losing.
You may end up losing their client. If they don't explain this to their client, the client is going to hold that realtor at fault, and they may end up losing their client.
And that's another point. It's like, realtors educate your people, man, and don't shoot the messenger. All right, for these borrowers. All right, these realtors are trying, and is ultimately they can advise, but ultimately you make the bid of what you want to. So, like I said, don't shoot the messenger. They're trying their hardest to get you. Everybody likes to get paid. We're not in this for no reason. But it's just a competitive market. So again, just to recap, have that patience. Sometimes you want to move like yesterday. Sometimes it's just not the case. Keep an open mind. Maybe there might be maybe a couple miles down the road from what you initially started. The realtor might have a house that maybe at first you didn't know. Keep an open mind. I'm not saying you have to get something that you don't like, but definitely in these times, going in with a tunnel vision, it's very difficult. Also have the patience that, okay, it might take 3 months. Give yourself 3 months with this process, okay? Continue to save your money. You don't know what's happening, and just generalize just out of care. Again, take what's happening with these restaurants and bars. Everybody went back to work thinking everything was good, and all of a sudden stuff starts to retract. We are in a climate that you got to take care of yourself as well. So just if you're working, great, continue doing it. If you can get your 40, get it. I cannot use the unemployment for most of you guys. Save your money and take the lead from your realtors. All right, it's that type of climate.
Makes sense. Great tips to get everyone going here. So how can they reach you? How can they connect with you if they want more information, if they want to get a pre-approval? Where do they find you?
Those are always good. First and foremost, for everyone who has Brick House's contact information, they can definitely get you over to me. No problem. They do work with other lenders, but if you specifically want to work with me, Chris Hardy, Freedom Mortgage, they can definitely get you there. I'm also, again, my full name is Christopher I as in Isaiah Hardy. I'm on Facebook. You can find me that way. Facebook business that way. Instagram is call Chris. The number 4 underscore. I'm sorry, I always mess up myself. It's call Chris underscore the number 4 home loan. So it's call Chris 4 home loan. The underscore is in between call Chris and 4 home loan. But again, Instagram, if you put in Christopher Hardy, Hardy, you'll find me there. LinkedIn is the same. I'm also on Zillow as well, so you can find me on Zillow. And like I said, if you deal with Brick House the short way, if this was too much for you, you can always ask for Chris.
I did put your contact information, in the chat for anyone that needs that. And so there you have it, you guys. That's your mortgage update. What's going on in the market? Oh, I do have one more question for you. If you know they want to buy a home, what's too early to call you?
Right now, I tell you, people will try to pre-screen me when they talk to me. What's your, they're asking me the questions, and this is like I would suggest, okay, let me ask the questions, okay, even if you're not there yet. A lot of times, I prefer to kind of give you direction on where you should go, whether you try to guess it based off the questions that you ask me, because you might be missing information or not giving me the right information to make that call for you. So it's never too soon to give it a try. Now, don't get me wrong. If you know you're in the 4s, you got to work a little bit. But if you think you're right there, our minimum score is 600. If you think you're getting there, if you're on the upswing, let's just try. Unless obviously if you have a bankruptcy that just happened. If you got a bankruptcy, 2 years, please. But it's not with your realtor or with your lender. If you want to give yourself some extra time, I'm okay with that too. What happens, Andrea, though, I will say this in closing, just lightheartedly. I had a guy, he was like, well, I want to get pre-approved, just kind of see where I'm at. I think I'm going to purchase a year from now. And as soon as we gave him his approval, all of a sudden his eyes get big and he's like, oh, man, I just signed my lease. He wants to break his lease already. I don't suggest that. But no, it's good to get that information out early. And if you have time, if you need time to work on your stuff, let me help you with that, because I don't want you just paying a whole bunch of stuff that you might not even have to pay. Okay.
Perfect. So you heard it from Chris. You can call Chris. He'll help get you together. If you know where your score is and you know that you're going to need more time, you might want to have Chris go ahead and run your credit, look at it now, some tips on what you should do. But outside of that, if you are not already, please go ahead and like or subscribe to my channel. Hit the notification button so you know when we are going live. We always going live, providing you information about real estate and other topics here going on in Cleveland. So thank you everyone for joining me. Thank you, Chris.
Thanks for having me as always.
All right. And we will see you next time.
Ciao.